Inflation consequences for the stock market. Here's another indicator to pile on top of the mountain of indications that I've been covering over the past few months, all flashing red warning signs. The S&P real terms dividend yield is now less than that at the dot-com bubble peak. In fact, one would need to go back to the depths of the early 1980s inflationary depression to reach such poor returns. Real terms dividend rate is another harbinger for lower stock prices, or at least sustained stagnation. So while stocks do tend to be leveraged to inflation, i.e. those with moderately low PEs, however, this is only if earnings and dividends are able to keep pace with inflation. And as we have seen, inflation is surging higher whilst dividend yields are not. And as for the Fed balance sheet, not to forget the inflation megatrend courtesy of rampant central bank money printing to monetize government debt, coupled with the fake inflation indices where up until recently the Fed had succeeded in hoodwinking the masses that US inflation was just 1%. Instead, that time I warned it was more like 6%. And now it's more like 12%. Anyway, the money printing binge now totals $8.4 trillion, up from $4 trillion at the start of 2020. So it's doubled. The bottom line is, forget what the bond market is implying, because interest rates are manipulated. Instead, the real impact of money printing should be seen in a falling dollar or purchasing power in the shops. So every central bank is printing money, so it's going to be a bumpy ride. In the meantime, if you think there's deflation, compare the price of the stuff that you really want to buy against what they were selling for a year ago. That's if you can get what you want, as illustrated by the tech market that tends to be out of stock of GPUs and CPUs and memory, a market that is seeing price hikes on a near daily basis to typically double MSRP. Hence my message for the duration of 2020 was to buy your big ticket items now before the price hikes kick in. For good 6 months have been materializing during 2021. For instance, in the UK, even the price of second-hand cars has gone up to typically 18% more than a year ago. So it's maybe a good time to get rid of my Land Rover and buy a Tesla, but I wouldn't buy the Tesla stock. This video is an excerpt from my recent comprehensive analysis of the stock market. A full spectrum analysis that concludes in a detailed trend forecast into the end of 2021 and then continues all the way into 2022 with indications for what to expect even for the remainder of 2022. Analysis that had me dig deep to clear the mists of time, all the way to deep analysis of the seasonal trends on a scale that you will not see anywhere else. From the usual seasonal analysis that's expanded on multiple time frames to the new short-term seasonal trend and the presidential cycle, best time of year to invest in stocks, and a 2022 seasonal investing pattern. And then putting it all together into a final stock market trend forecast, and then coverage of AI stocks and my buying plan, as well as the high-risk stocks portfolio. And then we take a look at Afghanistan, China, the comprehensive analysis that took me a good 2 weeks to do this analysis. And it's first made available to patrons who support my work. And do check out my full analysis that's been first made available to patrons who support my work. Extensive analysis on updated AI stocks, buying levels and more, so that you are well prepared for what's to come, as I hope my patrons are, as I am, because I put my money where my mouth is. What I say, what my analysis suggests, I implement. It said buy Intel below $850, and that's what I did, triple my holding of Intel. Anyway, My latest analysis includes AI stocks updated buying levels, as you can see from this list of contents. And do consider becoming a patron. I supported my work for just $4 per month. I'm underselling myself. After all this inflation, I should inflate the inflation. It should be $50 a month, not $4. And do remember to subscribe to this YouTube channel for new videos as we chart the inflation mega trend in motion, a runaway train. And you got the fools at the Fed saying what? Oh, it's transitory. Oh, there's no real inflation. Oh, it's all, no, you've lost control. You lost control when you started printing money and you have lost. You understand this? The Fed does not control inflation. They have lost. It's like the 70s again. They're just going to keep saying, "Oh, it's it'll come down. It's come down. Oh." They'll do that for a decade. That's what they did during the 70s. They didn't know it was going to unfold the way it did. They just kept saying, "Oh, it's going to fall next. Next 6 months is going to tear. Oh, it's going to come down. Oh, it's going to." 10 years later, they go, "What the hell? We've just spent what's that? A decade." Right, let's ramp up interest rates and kill this inflation monster once and for all, and that's what they did. Yeah, who was it? Greenspan. Was Greenspan this? No, it wasn't. It was Volcker, wasn't it? Yeah, that was it. I'm sure it was Paul Volcker. See, I'm getting old. So that's what they did. We've been talking crap for it. That's what they're doing now. They're talking garbage. 6.2%. Real inflation's double that. Crazy inflation is here, as I've been warning. You can't say you weren't warned. Go back and watch my videos from 18 months ago when they first started printing the money. I was saying, like, anyway, you're gonna watch it later because I've got that outro. I've got that bit in every one of my videos towards the end, so you can watch it after this. My strategy during the great crypto bear market of 2021 was to accumulate into select few cryptos that my research had deemed to be, well, relatively safer. Obviously with cryptos there's no such thing as safe. Anyway, deep discounts to the highs of as much as 80% improves the risk reward ratio somewhat. And the rest of this truly extensive analysis has first been made available to patrons who support my work at just $4 per month. Extensive analysis that includes cryptos that I have deemed to have a high probability of trading to many multiples of their current price, most of which still trade at deep discounts, including my price targets or where they could reach during the next crypto mania when the millennials will be FOMOing out of their mouths, foaming. So do consider becoming a patron by supporting my work for just $4 per month, $4, for immediate access to all of my analysis and trend forecasts, including learning material and including my recent analysis on why so-called transitory inflation is likely to be permanent. So batten down those hatches for what is to come. And then there is my extensive analysis of silver, including a trend forecast into mid-2022. Also is extensive analysis on the prospects for the stock market into mid-2022, with my next analysis, soon to be published analysis, updating the buying levels for AI tech stocks, Google's, Amazon's, Facebook's and so on, AMD, TSMC. I better stop there. For instance, Intel hit its buying level of $48 last week, which is what my patrons have been patiently waiting for since Intel was trading high at $65, when I was saying, no, don't buy at 65, just buy at the buying level. That's why I've set the buying levels where they are high probability levels that they should trade down to eventually. And here we are, some X months later, $48, buy. And I did what I said I was going to do. I tripled my holding of this quantum AI tech stock, now trading at a dirt cheap P multiple of just 9. I compare that to Amazon on 58, with many more stocks homing in on their buying levels, such as IBM, which I bought splitting into 5 shares of IBM and you get 1 share of Kendall. If you value them together, then the current stock price is around $132, whereas it's trading at $126. So you should have bought before the split, because you'll have a net value of $132 to $133 against the market price around $126. So that's IBM. And don't forget Facebook. We're still buying at $384. Wait for it, $301. That's what it's homing in on. It's not got there yet. It came close, $308 last week. I nearly bought it at $312, but I didn't. But it was close. So do consider becoming a patron by supporting my work for just $4 per month for immediate first access to all of my analysis and trend forecasts. Your mega trends ahead of the curve investing analyst with over 35 years experience. That includes being one of the few who both recognized that the stock market was about to crash in October 1987 and profited from it by shorting the Dow before it crashed. $4 per month is dirt cheap for what you're going to be getting access to, compared to the clowns on YouTube barely out of puberty pumping scams and such like, totally oblivious to the megatrends such as the inflation megatrend and the AI megatrend that I've been banging the drums for since 2015, when you could have picked up the likes of Microsoft for about 1/10 its current price. Then we have the war with China megatrend, which I've been drumming since must be late 2016, something like that. All of these megatrends are where the trends manifest themselves, and all you're usually aware of is like the fluff on top, barely visible fluff on top. That's what most of the commentary is concerned with. When did you last hear about the war with China megatrend? I bet you haven't. You heard of AI, but you know it's a megatrend that's going to run for 20 years, and quantum computing megatrend is part of the AI megatrend. Anyway, do consider becoming a patron by supporting my work for just $4 per month. You're not going to get any better value for money than that, as we defend ourselves, protect ourselves from the rampant money printing inflation by the central banks. Insane money printing as though it's not going to feed through into wage and price inflation. Big inflation is coming, as I've been flagging for over 6 months. It's more like a year now. That's what I was saying last year. If you're thinking of buying big ticket items, do it now before the price hikes, which have transpired. I bought a Karcher K7 for £340. Current price on Amazon is $565, and similar for lots of other tech items I bought. For instance, the components in my PC that I ordered in January and got delivered in March was £3,100. Current price of the components is over £4,000. Crazy, the inflation is here, and it is accelerating regardless of what the indices say. So protect yourselves by investing in assets that are leveraged to inflation, and AI tech stocks are leveraged to inflation and are about to get discounted. So do subscribe to my YouTube channel for such analysis, and do consider becoming a patron.